Normally, statutory bank branch audit, we get appointment later at the end of the March or first week of the April. There are some chartered accountants saying like that, the statutory bank branch audit is a bonus, or some people say gift. Why it is like that? Because they feel that they get the appointment, surprise appointment. They don't know which branch they are going to get. That is first. Second thing, they feel that they have to finish audit within 7 to 10 days. Again, it is fantastic. After that, they are free. They get all respect, all facilities from the bank, accommodation, lodging, boarding, traveling, and it feels like, outstation enjoyment, those who are going for outstation. And not only that, you get all statements ready from the bank, online statement, everything is ready. Only you have to go and sign the statement. Apart from that, banks are helping you, they are behind you to complete the audit. They will say, "Arey sir, aapka reports, everything is ready. All certificates are ready. Tax audit report also ready. So please come. I have already signed the papers. You please come and sign the papers." So, it is a very good atmosphere that everywhere everything is ready. And we do the audit. And last, why we are working? To get a gift. That also we get within 30 days after completion of audit. So that is a scenario of banking, but practically it is not like that. Practically it is different. Those who are not doing banking audit regularly, they may feel that it is a gift, but I don't know if it is a gift or not. At the end of the sessions, you have to understand it is gift or something else. Friend, bank industry is a mirror of economy of the country. Always, whatever effect happening in the bank, it's affect to the economy. And initially, banking was a manual banking. Now it is changed to the core banking, IT-based banking. So definitely our audit systems, audit techniques, we have to change. It cannot be old methods. Initially, I believe that before 10 years, auditor was thinking verification of arithmetic calculations. Nowadays, arithmetic calculation is not required. Automatic balance sheet tally. So, other tools we have to use to do a good quality of banking work. Every day you have seen that since the global economy is slowing down, stress is increasing to the bankers. The higher authorities saying that you have to enhance the finance. So under that stress, sometimes they approach to the customers. They try to transfer other bank's account to their bank by enhancing the facility. Actually, normally the method is that when account is transferred, when there is a stress, sometimes that account is likely to be NPA. Then bank itself saying that you shift your account to some other bank. Those accounts shifted to other banks with the higher facility. They says we got a good account. We have taken off from particular bank. But practically there is a hidden possibility of NPA. We shifted from one bank to another bank. So whenever you observe there's a takeover accounts, then you have to take care of that. Increasing NPA day by day, last 2-3 years, there's a RBI and Deloitte has declared from last 2-3 years the NPA ratio has increasing in quantum of amount of NPA is increasing. RBI Governor Mr. Raghuram Rajan, he said that he has strictly followed asset qualification review AQR, that every bank should clean up their NPA before end of the March 17. and he is rigorously doing follow-up to clean up the balance sheets. Due to that, lot of banks, NPA has shoot up. You must have heard that various bank has declared huge amount of NPAs that we are going to see that. Again, there's a threat of internet banking. Nowadays, young generation, those who are knowledgeable, techno savvy, they try to do something. They know how to do the banking, mobile banking, payment banking, internet banking, and those who are aware of the software, they try to hack the sites. There may be a true intention to test their deep knowledge, or maybe a intention of doing a fraud. So auditor has to take care of that also. Now there are different type of frauds is occurring. Bogus security, fake documents, diversion of fund, siphoning of the fund, internet crime, cyber crimes. So those things we have to keep it in the mind before starting the audit. RBI is very sticky with the KYC norms. In retail banking, normally fraud occurred due to the fake documents. So KYC norms, they are saying continuously to follow strictly. They are giving instruction to the auditor that they should do a KYC norms properly. Because something is happened tomorrow, they can communicate, they can hold the fraudulent persons. If the address is not proper, if data is not proper, then it may be a difficult. Recently, you must have seen those who reading Marathi paper Lok Satta on 20th March. You must have seen there's a flash news. There's a fraud occurred in Bank of Maharashtra, 2-3 branches, one Aurangabad, then Latur, Dharmad. 27 crores rupees fraud has been occurred. What type of that is a fraud? After demonetization, banks started cashless transactions. And under that cashless transactions, there's their UPI, Unified Payment Interface program has created. You can download that apps on your mobile. From that apps, you can transfer money. But there's a defect in that apps, which they have played. I don't know what exactly the detailed defect, but there's a defect in the apps. Wherever customer having zero balance, no balance, from that account money has transferred to other account. Like under UPI, you can make the payment up to 1 lakh rupees. You can withdraw or you can make a payment up to 1 lakh rupees. So money has siphoned from that account. In Aurangabad branch, there's a loss of rupees 950 crores. In Bhayandar branch, 1.32 crores. Total Bank of Maharashtra loss approximately 27 crores. All over the banks, if you see, wherever same apps is applied, it may be a 75 crores. So these are type of frauds is occurring. There's another fraud in Calcutta, Axis Bank. Fraudulent company has opened one account, Computer Science Corporation Limited. They have opened a fake account with the fake document. And from that account, they open another fake salaried account with the again fake document. Issue a credit card. They utilize those credit card and siphon the fund. The amount is 9.90 lakhs rupees. There is a huge fraud occurring in the system. So finally, auditor is again, he has to see that where they have to put a control. There is a major fraud occurred in Punjab National Bank. Total fraud amount is 2,250 crores. State Bank, 2,236 crores. Axis Bank, 1,998 crores. Total fraud in whole banking system is 17,750 crores. This is a huge amount. And how many employees involved in that? In private sector bank, public sector bank, total employees are 450 employees involved in as per the record available, 450 employees involved in the fraud. Means fraud cannot always taken from the outside. There's a collusion of bankers and outsiders. There are 64 employees from State Bank, 49 employees from HDFC and 35 employees from Axis Bank and balance from other various banks. Total 3,870 cases has been filed. Now, can somebody tell me that what are the reason of the fraud? After understanding this, what will be the reason? What are the reason this fraud is occurring?
Poor internal controls.
Okay, big control.
Big controls.
Yes. Anyone else?
Human nature of being greedy. That's the most critical in the bottom of everything.
Lack of efficient technology also one of the reasons. Because sometimes, system is not working properly. System is slow. They could not able to trace out the account. Pollution of bank employees and external employees. Continuous reliance on a manual systems, because those who are the senior bankers, they like a manual system still, even though core banking is started. Difficult to integrate data from the various sources, because nowadays banking area is not a limited area, it has expanded. Transaction coming from ATM, phone banking, internet banking, normal regular banking, and correlate those transactions is difficult. Again, last, not the least, business pressures on a banker. Higher authority pressing them that do the business, increase the advance. To such that sometimes they comes under pressures. In retail banking, there are frauds like fraudulent documents, overvaluation of securities, absence of collateral, KYC, forms are not properly updated. In corporate banking, major frauds, it is a diversification of the fund. Utilization of fund is not properly monitored, so siphoning of the fund.
I think
Yeah.
otherwise good time jayega.
Yes, yes. There are other things. So after looking this, now you can understand. Even RBI is giving show causes notices to the auditor. If auditor has classified NPA and what RBI classified NPA, if there is a difference of more than 10%, then they give the notices to the auditor. So we have to take a precaution, because there are some banks which is under watch category. Those who are the auditor of that bank, they have to take care. IDBI Bank, Indian Overseas Bank, UCO Bank, they are under watch category. So finally, friends, tell me, it is a bonus or gift? That again you have to think. Last year you have heard of one news in Gujarat paper. There's a flash news that 500 notes and 1,000 notes currencies is going to be withdrawn. That was a thoughts of the RBI. They are going to withdraw that currency. It is already declared in the Gujarat on 1st April. And you people are aware of it on 8th November, what has happened. You are witness for that. Today is also 1st November. Ashok already reminded it is the 1st April. So, is it April Fool? That we have to see. It is not an April Fool. What is going to happen in future, that we have to understand. Now coming back to, after understanding this, why audit planning is important. If you do the proper audit planning, then the risks will reduce. Now, we have to see the bank functions. How the bank, because those who are new, I think those who are regularly doing bank audit, I don't have to explain them, but those who are new, the bank is doing primary and secondary work activities, accepting deposits, lending advance, agency functions like transfer of fund, periodic payment, collection of checks, portfolio management, periodic collections, insurance business nowadays they are doing, purchase and sales of foreign exchange securities, draft, locker facilities, underwriting, and so on. I have already explained what are the reasons why we should do the planning, but still, very good planning will give a good quality work of audit. Bank are dealing with the various tasks. So planning is required. What are the products? That is the advance, deposit, credit card, debit card, insurance, government business. Data invisible. Why planning is required? There was initial days manual data was there. People knows posting, writing entry and posting. But here posting nobody don't know. You have to go in a separate menu and find out really that entry is posted properly or not. Or there's another area that is another account that is called a suspense account or nominal account. If it is not properly posted, it will go to the suspense account, nominal account. Non-performing assets, systems control, internal control required, various legal statutory requirements, guidelines to be followed. Analytical review is also required. Last year, balance sheet you have to take income, expenditure, loans, deposit, compare with the current year. Check the difference, compare that total amount of deposit with the interest amount, average rate of interest, and if something is happening that, you can able to identify. Management audit working paper is also required to maintain because as per the issued rule, peer review, we have to give the working papers. Audit staff training is must because they should know if there is a specialized branch, specialized person is required. They should know how to use the Excel, how to extract the data from the systems on the notepad and then convert into Excel and then compare. So you will get that person should have the knowledge. Now procedure of primary work. After getting appointment letter, we have to give acceptance appointment letter. Acceptance for the audit, appointment letter. Before giving acceptance, there is a condition that you should not be an auditor or you should not accept any assignment in previous year and current year or your sister concern or associate. If you are doing any assignment or any work in previous year or current year, then you should reject that acceptance. NOC from the previous auditor you have to take is a common thing. Issue of audit engagement letter. Change in constitution. If any firm's address or constitution has changed, you should report to the head office or branch. Letter to the branch manager for requirement that we are going to start the audit. Please keep record ready. So and so records. Whatever record you have to you have to write in the letter that mostly we should ask what I believe. One table, computer, peon, one loan officer should be free and one EDP person who is looking after the IT. So these people should be free for you. You have to tell them your projected period, and what date you are going to be there. So these people should be free for you. So it will help you. They will be the additional assistant for you.
This draft letter is given in the guidance note, just for me.
Yeah. And if you want to refer a draft letter, you go through the guidance notes. You will get a draft letter also. So take that draft letter from that. Prepare audit program detailing. Study previous year audit report, internal audit, inspection report. Whatever serious irregularities are there, you have to jot down it and check that what steps taken for the rectification of those things.
Sir,
Yeah.
branch also considers this auditing. 2 years when it was under audit. So do I need to take NOC from that 2 years when it was audit?
I don't think it is required because continuation there is no previous auditor. It is not required. Am I right?
Yeah.
It is not required. Check risk assessment, evaluation of internal control. That you have to, whenever you go for audit, you have to check that internal control is properly maintained or not. Passwords and all that. Sometimes we should tell them that pass a dummy entry. This is my normal practice. I want to see, I don't know ABCD about your system. Please pass one dummy entry. I want to see how the entry is going inside. At the time of that, if single person passing full entry means maker and checker concept is not following. There should be a dual control, maker and checker. When somebody is passing entry on a screen, somebody should verify and authorize. But without doing that, whole entry is passed, then internal control is weak because he knows the other person's password. So under his password he has passed the entry. Flexibility of the audit plan for giving extra focus, because sometimes you don't know. You feel that it is a deposit-oriented bank, time will be required very short. But after going to the bank audit, you will understand no, it's required a further more time, because sometimes internal audit is not there or concurrent audit is not there. That branch is got you as a statutory auditor. You are a statutory auditor for that branch. Now, in such a branch, I feel that you will get lot of queries. KYC norms, definitely, because nobody is going to look after what KYC form they have done. So there you have to deput further more people to look after the KYC also. Review of latest RBI circulars, issued guidelines. HO circular is also one of the important. That is the internal circular. It is depend on the bank to bank. So they given a separate instruction. So you ask internal circular from the HO. Read that circular thoroughly, because that is very, very important for that particular bank audit. Then finally, proper coordination with the branch staff. You have to tell them that when you are going to start the audit, when you are going to complete the audit, nobody should go on a leave. These people should be available for me. I am going to sign report on so and so date. So mentally they will also prepare with you, and they will support you. They will sit late. They will come early. Proper then knowledge about the branch. Definitely you have to ask various questions to the bank manager. Is the ATM is attached with this branch? Currency chase is attached with this branch? So many things you have to ask the questions. So from that you will understand what is the deposit amount, what is the loan amount, what are the NPAs. So you will understand what type of advance are there. Their CC accounts are more, or housing loans are more, or corporate accounts are there. On that line you have to draft your audit planning. Misstatement of income, the key area to see, that is a misstatement of income, expenses, asset, liabilities. There's a possibility of the income is not properly passed. Say for example, loan interest is 10%, somebody has modified, interest has corrected and interest generated, so interest has gone wrong. There's a possibility of processing fees has not charged. So there's a misstatement. Expenses, revenue items transfer, capital item transferred as a revenue item, because bank manager does not have power to purchase assets. They have to take the approval from that. And common problem is what? Computer is not working. They want to change the CPU, keyboards, so many things they want to change. But for that they have to take the approval taking a lot of time. So what they are doing? Small amount, say 7,000, 10,000 rupees, they put in a miscellaneous expenses account and transfer. So the capital item goes in the revenue item. So that also you have to see. Proper asset classification and NPA provision, my co-speaker will talk on that. KYC guidelines not properly followed, that we have to test check it. Failure of internal control system not able to detect frauds. Internal control failure means what? Sometimes staff doesn't have the detailed knowledge. Senior people is there, he is operating that, he is saying that I am going to retire within 1 or 2 days, 2 years. Why I should go deep? Now I am waiting for my transfer or retirement. So they are not going in a deep, so fraud is occurring. Sometimes there is a possibility of the wrong certificate. No, we got a habit, there is a limited time we have to complete the audit. We have other assignment also. So what happening? Branch manager is showing that he is intelligent, he is absolute, perfect, correct. He is saying that, sir, आपके सारे certificates are ready. Most of the certificates are nil, only we have to sign. So what we are doing, on his word, on his talk, we are signing all certificates. There are sometimes a possibility. There are some entries we have to write in that certificate because it is occurring in the balance sheet. But we are giving certificate nil. So that precautions we have to take care. I have seen so many times some certificate where branch manager has signed, auditor has also signed. There's a questionnaire is on right hand side. After questions, you have to give answer yes or no. But I have seen such a statement that everything is printed. Even there's a on right hand side yes stroke no, nothing has cancelled. Even no or yes. Both the things has mentioned over there. So totally it is a wrong certificate because technically nobody has looked in those things. So that precautions we have to take. Major area of audit: advances, deposit, physical verification of cash, assets, securities, suspense, sundries, nominal account, sundry liabilities, interbank reconciliation, contingent liabilities, income and expenditure, in-pay classification, income recognition, verification of debit card, credit card, and core banking solution. Core banking solution is a very, very important here. Other things, other areas, our co-speaker is going to talk. In contingent liability, here you have to take precautions. You know, sometimes normally most of the branches on a lease, rental basis. So there is a possibility of a rent agreement has been expired, landlord asking higher rent, branch is creating disputes. After dispute settlement, they agreed that your rent will increase from so and so amount to so and so amount. But banker has not released the check for that higher rent. That you have to check why he has not released. Then sometimes he gives the answer, he has committed that he will do renovations. He has not done renovation, nothing. So we have stopped the payment. So we'll give the payment, but we'll give afterward. Now tell me, what will be the effect for our accounting? We have to pass the entry or we don't have to pass the entry? Because there is a confirmation, amount has accrued and due, but not paid. So we have to pass the entry, we have to create a MOC for that, and whatever difference amount it is there, you have to mention that. It is a contingent liability or actual liability? Actual liability. So there is no question of contingent liability. Absolutely MOC you have to generate. Now contingent liability. There are some complaints given by the customers that somebody has siphoned money from my account. There is a police complaint also lodged. He has given written complaint. So this 25,000 loss of customers, we have to report in our balance sheets or we don't? No. It is a contingent liability. We have to note in a contingent liability this is thing. There are some possibility of old dispute like landlord dispute, but yet it is not settled. He is asking, say for example 1 lakh rupees rent, bank is giving 50,000 rent, but that account has not settled yet. Dispute is going in a court, cases is going in a court. That difference of 50,000 rupees per month you have to say as a contingent liability. NPA classification, my co-speaker will talk on that. Then tax audit report, you are all aware of it, I don't have to talk on this. Even people may throw some light on that. Balance sheets, profit and loss schedule, long form audit report, statement of fixed asset. Now here you have to take care. Statement of fixed asset, sometimes manager has transferred from one branch to another branch. When he transfer, vehicle also transfer from that branch to this branch. Physically transferred, but practically the instruction has not come, so that asset has not booked in this balance sheet. Sometimes some assets transfer from this branch to another branch. At the time of verification of fixed asset, you will find that there are some assets lying on the corner, like PCs and all that. He will say that, sir, ये तो non-working PC है. At the time of verification of fixed asset, you will find that there is a 10 PC in the books, but practically lying 15 PCs in the premises. So 5 PCs or 5 other items not recorded in the books. It is out of the books. Is there any risk? As an auditor, what we have to say? We have to let go, or we have to pass any comments or remarks on that? Anyone?
Yes, it would result in misappropriation of assets.
Absolutely, absolutely. Because in the books, the value of security has converted as a zero, no value. But security is there. So that security or that assets can be sold off and that money can be siphoned off. Similarly, a cash counting machine is a valuable machine. You will find that some cash counting machine is not working. It has already taken out from the books, but lying in the branch premises. He will say, no, that HO is going to take this machinery. Still it is pending. But we have to report that. MOC, memorandum of changes. Now friends, tell me, all statements are generated from the systems. Are we going to change any statement? Do you have any power to change the statement as auditor? Whatever statement generated from the systems, you have to sign as it is. So can I say on the first day I can sign the statement? Without looking anything? Why not? Why not? What I say? You cannot change the statement. Even if you, yeah, you have to read, but that you can read afterward also. What I want to say, can I sign the statement on the first day? Those statements generated from the systems?
No.
No. Anyone? Friends, we can sign, subject to only MOC we should not give. Because anything is happening in that statement, we have to report in MOC. Memorandum of changes.
I don't agree with you. You can't sign on 1st April for the reason that 1st April would be deemed to be unaudited accounts. See, you can
Not
sign
1st
account-
April, first day of the audit.
Whatever, I mean, because if you are signing means you are not audited. So once you conclude the audit, then only, even though you can't make any changes in the accounts, I think you have to sign on the day you conclude the audit, because if you sign before audit, it means technically speaking it is unaudited. So I think we should take a view that you should sign the accounts once you conclude the audit and not before the end date. That is my view.
Agreed, agreed. I appreciate, sir. Then this is a view for precaution point of view. My question is different. My question is different. Suppose if I go through this report, generated statement at the end, are you going to change those statements?
No.
Answer is no. Only delivering the statement or not, or reading the statement, or that is a secondary question. But the statement is not going to change. It is going to remain as it is. After looking those statements, if any error is found over there, you have to report in a MOC. My co-speaker will definitely, it is a differ. I am not insisting you to sign statement on the first day, but I am just throwing a light. If I sign on first day, there is no risk. Only thing is that I have to read those statements thoroughly. If any error is there, I have to report MOC. So what I will do, I will not sign MOC till the end. My MOC will be last certificate.
I feel it should be continuously evaluated during the course of audit.
Correct.
Because otherwise, how will you come to know the difference between what you are doing, what you have checked, and what is reported as entries in the statements? So it should be a continuous process throughout the stage of audit.
Agreed.
Keep on reviewing it, and then based on it, if there is a difference, you pass it as a MOC.
Correct. I agree with that. No, I am talking just only, is the statement, normal audit, what happened in after verification, we are going to change the balance sheet, so many things it is changing and passing the effect provision also we are passing that. And after that, balance sheet is final prepared. But in this case, you are not going to change anything.
See, I think we have to take a different perspective on this. Sorry for
Yeah.
interrupting. See, now the bank size are huge. They have, branches ranging from 2,000 to 3,000. So MOC is nothing but a rectification entry. Now typically what happens is that 31st March the bank closes his account and 1st April they have to start the business. Now if you go to a private sector company or wherever, the books of account are opened, you pass the journal entry and you rectify the accounts as of 31st March, backdated entry, and close the accounts. But in case of banks, since the branch has to continue its business, they can't pass rectification. MOC is nothing but rectification entry. So what happens is that, as he rightly said, bank can't change, but head office of the bank makes rectification on behalf of all the branches. Suppose you are finding revenue leakage in a particular branch of say 50,000 rupees, so you will issue an MOC debiting advances, crediting income. So that MOC would go to HO and HO would pass entry in their book, because books of account of HO are open. They are not closed as on 31st March. So HO would pass an entry debiting advances and crediting income, and then they will in turn give intimation to the branch that this rectification entry has been passed by us. So branch will pass that entry in the current financial year, that is 17-18. So technically speaking, the books of account of branch are undergoing change. But because of this limitation of not stopping business the next day, the entries are passed by HO. So this is just giving a perspective. So it's a highly debatable point.
Yes,
so
definitely.
I just wanted to throw some more light that technically speaking, even though there are no changes in the accounts of the branch are made by HO on behalf of the branch, and which in turn is implemented to the branch.
Correct. Now going further, certificate, memorandum of changes we have already discussed. Certificate of fund, interest on loan, special deposit scheme certificate, we have to give interest, subvention limit, data for CRR, certification of DIGC, certificate of PMRY subsidy, certification for internet subvention, certificate for passing of the previous MOC. Now again, here, again debatable. Last year previous MOC, you have to check, is there any previous MOCs passed? If it is passed, then it is our duty to check those entries comes in the current bank, because just now Vipul bhai said, HO is taking care of those things and the effect will come to the next year. So you have to check those if it has already passed or not.
So always you have to look into the previous year's MOCs or previous quarter's MOC.
Not previous quarter, previous statutory audit. Last year audit you have to see, and there if statutory auditor pass MOC, those entry has passed during the year or not.
You have to see that also.
Yeah, that we have to check. Certificate of cash margin, it is a depend on the deposits of the bank. Cash margin is given. Contingent liability I have already discussed. Age-wise detail of suspense payment. Ghosh and Jilani committee reports. Normally people just copy down from previous to next. Last year audit ने जो दिया है कोई copy होता है. But here also we have to take care because we are responsible. We are giving certificates, so read it, understand it. If you don't understand, talk to the bank manager and write down. Age-wise classification of other assets provisioning purpose. Data for additional disclosure, that is maturity pattern, ALM, exposure of sensitive sectors, segment of reporting. Friends, with this, I have completed my talk. Absolutely.
There's one more.
Within time. So if you have any query, please.
Okay, sir.
That I'll take after. Thank you very much. If you have anyone queries, please, you can ask, or I'll request another speaker to continue.
Well, you discussed about fraud in the beginning. Just one question. Taking this, what is happening in the current environment,
Okay.
where IDBI managers, where IDBI executives were arrested, where decisions where you're talking in hindsight that something is which ought to have been done is not yet not done, and therefore this fraud has taken place. So is it justifiable to talk in hindsight after the event has happened and you're arresting those IDBI, those bank officials? Because that would affect the current scenario where even every banking official will actually shudder to take decisions that would affect the banking business.
Sir, I agree, but see, there must be, somebody should keep a restriction on that. That is one. And normally the fraud occurred, if you go detail and understand why fraud has been occurred, due to the internal person involvement with the external persons. So there is a more possibility that external person can't come directly and do the frauds. There must be some person who is helping to the outsiders. So that's why they put a responsibility, and when they arrested that particular persons, there must be a detailed story which we don't know. Maybe his involvement may be there. But normal small error, they will not do this. They have to prove that really their involvement is there in a fraud, so then a case will file. Otherwise, see, normal error can be possible. But somebody, you have heard in demonetizations, some banker has helped to change the currencies. You must have heard. Now how they have changed? In exchange, 4,000 was initially allowed, 4,500, then 5,000, 4,000, then 2,000. They have taken a KYC, means PAN number from whatever customer they have from their bank, and they have attached to the forms and exchange the currency. So now you tell me, sir, for this act, they should arrest or not? Definitely they should arrest, because confidentiality is shattered. So this is not correct. Sometimes, whole currency comes from the currency chest, directly gone to somebody else. So this also happens. So there, without involvement, fraud cannot occur. Okay. Thank you, friends, for patient hearing. Now, I'll request Speaker Vipul Choksi. Good morning, friends. Basically, I have to speak on two subjects. One is long form audit report, and second is verification of advances. What I would do is I will first take long form audit report for the fact that it covers the entire gamut of the bank audit in that sense, and coming to Hemant's talk on audit planning, I think it was well covered, but only one aspect, of audit planning which I thought we should cover is the compliance of auditing standards. Because you would be aware that auditing standards are mandatory, and of course, while doing the audit, we comply with the accounting standard, auditing standard, and we are expected to comply with the auditing standard. But nonetheless, I think we need to be very sure that the auditing standard compliance is properly documented by us, and some of the auditing standard, which we need to cover. I'll just briefly discuss, because I also have this presentation on the same topic ready, so I thought I'll just share with you those aspects. And in lighter vein, Hemant started with the frauds and the quantum of frauds which happen throughout the banking industry, and I thought it was a little frightening for the auditing fraternity as such, because anybody who plunges into the bank branch audit would first think that if fraud is not detected by me, then what would be happening to me. So, but I think we have to take all the precautions while doing audit and ensure that we do our job properly. That's it. See, one is SA 210, that is agreeing in terms of agreeing the terms of audit engagement. Now, typically, you get the appointment letter from the bank authority of the the bank. But as per auditing standard, the audit engagement letter which we say, you need to write a letter to the bank authorities, and these are the audit engagement terms, and you need to write letter, and typically as appointing authority, they need to acknowledge that we accept these terms and conditions. Now, when it comes to actual implementation of the auditing standard, the bank authority would, the branch authority would say, our bank has appointed you, why do you want this? But I would say, as a compliance auditing standard, you write an audit engagement letter, send it to the branch officially, keep it on a record, even if it is not acknowledged by him. At least you have done your duty by sending the letter. This is SA 210. Then SA 250, consideration of law and regulation in audit of financial statement. Now we all know that banks are regulated by the Reserve Bank of India, and all the relevant guidance and other things we need to be aware. So you need to have some documents relating to Banking Regulation Act on your record to establish that you have studied the law and you are aware of the law to conduct the bank audit. Planning and audit in financial statement, I think that broadly what Hemant has covered, you should document. Materiality in planning and performing audit, and materiality is very important, so you need to document that how you have arrived at the sample of how you arrived at the materiality level, and that should be documented.
I'm not going into the auditing standard per se, but then you need to do that. Then audit sampling, how you have selected the audit sample, I think that you need to be very clear. Then quality control for an audit of financial work, it is another auditing standard which you need to be compliant. Audit evidence, wherever you are having any audit evidence, like for example, in case of NPA, if you are doing some assessment of provision requirement, then valuation report would be an audit evidence. So such critical accounts which you are evaluating as NPA, audit evidence is very important. In audit documentation is something what he explained, you need to document. Then representation by management. This is another challenge, Representation by management is something which we need to obtain from the branch when we conclude the branch audit. But then again, there is a challenge from the branch manager that, audit representation, why do you need? Then there also, we in our office follow that procedure that we write a letter to the branch manager as if we are asking for the representation, and then he has to confirm that I confirm the above. If the top management, says that you give this letter to the branch auditors, he would give. But if he doesn't, then you at least, officially communicate to him that this is the representation which we need, and keep it on a record. So these were some of the key auditing standards which you need to be aware and need to be. Of course, all the auditing standards are mandatory, but
this representation letter should be addressed to the branch manager.
Yeah.
And it has got to be signed by the branch manager.
Yeah. See, typically representation letter is addressed by the branch manager to the auditors. They would write to XYZ and then say that we confirm this. But then if the other way is you write letter to them, then kindly confirm the above. On those lines you can write. If they don't agree to. So this was a brief about a couple of auditing standard. Now I will go to this LFAR. Now, if you go to the history of LFAR, the long form audit report came way back in 1985. Now, long form audit report is nothing but, so to say, management report. Now, before 1985, there was no clarity as to how the branch auditor should be reporting about the observations which are not affecting the true and fair view of the branch accounts. So what was happening was that the branch auditors were giving one statutory audit report as per the Banking Regulation Act, an MOC if there was any MOC required to be issued, and they were giving general observations, not in a structured way. So all the banks were getting branch audit observations in a different way, and for the management as well as for the central auditor, it was becoming really difficult to consolidate those observations, and that's why the Reserve Bank of India, in its wisdom, thought to come out with a structured management report way back in 1985, which has been revised thrice, I think. Once it was revised after 1985, it was revised in 2002, and again after some years it was revised. So the current report which we have is final version, but which is still under revision now. That may happen sooner or later. We don't know. So the purpose is address systemic issues, whatever system-related issues are there in the bank, they are getting addressed through the LFAR. Whistleblower for irregularities, if something irregularities are sometimes, one may feel that, the report which I am giving is not very significant, but then the management may consider it to be very significant. So it acts as a whistleblower for irregularities. An excellent audit planning tool. Why excellent audit planning tool is that if you go through the LFAR questionnaire, it covers the entire gamut of the bank audit. So if you start systematically the LFAR, you will cover everything. So typically, what I would suggest is that if you are going for bank branch audit, and whatever said and done, Hemant, whatever you talk or I talk, the challenge to all of us is the time. So in a limited time given, how do you really, do the entire exercise of doing the audit in a proper way, plus documenting whatever we are doing. So I think we need to have a team of 2-3 people where senior person would be looking into advances verification and things like that. a junior person could be assigned some of the clauses of LFAR and they would be doing those aspects, and some other person could be given some clauses of LFAR. So in a way, you cover LFAR, entire LFAR, as well as the entire bank audit. So that is how typically you should be structuring your bank audit. As I said, constraints, limited time, lengthy questionnaire, lack of availability of information, cooperation from branch at all levels, online submission of LFAR. Now, some of the banks, they have system of submission of online LFAR. So in a way it is good. Why it is good? That you conclude the job at branch itself, you don't keep it pending, you don't go to your office and do LFAR. So, but the challenges of online submission of LFAR, there are limitation of what you should be writing. Some of the qualificatory remark or some observations which are adverse in nature, if you want to give, I think there are some limitations. But that you could give in a by way of some other annexures or.
So it's a mandatory for sort of online only?
No, like for example, Punjab National Bank, they have got online submission of LFAR. They have a rule made by them which the auditors have to fill, and there is a digital signature which the auditor has to put. So that is the system. So this is one bank which I know, other banks they do the system.
Statement is the same.
Statement is. Okay. So there you face any challenges?
In fact, statement 99% reports are everything is the same. In terms of challenge, if you ask me, of course there are challenges, technological challenges.
Yeah.
In terms of lot of reports not being opened and you're spending a lot of time wasting to figure out how do you close the report. Other than that, in terms of reporting,
But then physical there is no option, you cannot find in PNB what you said. Because then in a long-form audit report, when it comes to advances clause, I have a big annexure attached to that, basically.
So that to that annexure attached.
That
you can scan the attachment. That is possible. So if you have to scan 20 pages, you scan it and you attach it.
Lack of availability of information, that Hemant in his talk said that you should be writing letter to the branch when you start the audit. So I think that letter you should be writing in advance so that all the information which you need for LFAR are kept ready by the branch in charge. And they are aware, it's going on for so many years, but generally they have their own priorities. So, as I said, LFAR serves as a checklist because the entire thing is covered. Plan your work at the beginning of audit, go through previous year's report, inspection report, etc., which also, of course, Hemant has covered. Main audit report, LFAR are two separate reports. As I said, LFAR is a management report. In main audit report is the audit report, the safety audit report under the Banking Regulation Act. So if you have something which is mentioned in the LFAR, which has got bearing on your true and fair view of the financial statement, then that must find place in your main report. Say for example, if you have mentioned in your LFAR that this account is NPA, but the branch has classified the account as standard now, that is a very serious observation. So if you are putting that observation in your LFAR, then it must find place in your main audit report. So it is all the more important that LFAR and main report are finalized simultaneously. Otherwise, you may miss some important points which are otherwise required to be reported in the main report.
LFAR will be prepared at each branch level, right? Each branch.
Yeah.
And it get consolidated at the HO level.
See, basically it's like this. I'm sorry to ask you this question. Have you done bank audit before? Oh, that's fine. You will be doing it this time?
Yes.
Okay. See, LFAR, as I said, is given by each branch auditor. And as I said, it's a management report. The management, the level of the bank is that you have branch, then you have region, you have zone, and you have HO. So branches report would be consolidated by regional office, by zonal office and the HO. Only thing is, the LFAR for the head office or for the bank as a whole, the format is different. The manner in which you report these observations are in a different format. So this LFAR for the bank as a whole is a different format. So the management as well as the central auditor, they would call out the important observation from this branch and then they will incorporate in the main LFAR. So it's not consolidated in strict sense because it's like one auditor has mentioned in his report that insurance is not renewed. Now, 100 branch auditors say that given that insurance have not been renewed, so it will be consolidated into one observation by the central auditor that many of the branches of the bank have not renewed insurance policy. So, just giving an example.
So can we say that it is at the discretion of the central auditor to pick up what is there in the branch?
Yeah, true. See, because what happens is that central auditors...
materiality also at the overall balance sheet level.
But I think one very important aspect is that central auditors of the bank also do branch audits. So they also have first-hand experience about the working of the bank. So they would be having their own observations also, which would be matching with the branch auditors.
The inspection of the audit department of the bank will want the LSAR compliance report to be submitted by each and every branch. The statutory audit is completed, which has to ensure that each and every observation in the LFAR is closed, especially if you have insurance and mortgage.
Yeah, that is in the next year. Like if you are doing 60.
No, so what happens is that if you close your audit by the 15th of April, they would have given you maybe 45 days to close all the observations in the LFAR. So it has to be closed by, and then that review will be again then taken care by the corporate auditor of the branch.
Yeah, that's what I'm saying. See, when you are doing, say 15 April, if you are concluding and 45 days time you are giving, but by that time main audit also would be over, no? So the central audit also would get chance to see those compliance. So ultimately, like 15, 16 compliance you would be seeing in 16, 17. That's what I'm saying. Comments in LFAR should be specific and not vague or general. Now, this is something which is very important, a very important point. Like many of the branch auditors, they give the observations in yes and no. See, I think that is something which you should not be doing, because that not only reflects poor on the audit fraternity as such, but also the management also sometimes feel that the branch auditors are not doing justice. So when I come to the specific, I will give an example. So don't give answer in yes and no. Give at least one sentence reply rather than yes and no. In some cases, yes and no may be enough, but generally speaking, you should give a proper, in our view, in our opinion, according as per observation made by us. And on those lines, you should give a report rather than saying yes and no. Give instead of shortcoming, I think you should, whatever observation you have, you should supplement it with the shortcoming which you have found in while doing audit. LFAR is of utmost importance to management, which I already discussed. Finance Statutory report, LFAR 70, because they are different reports and you should not miss something which is important in LFAR and also required to be reported in the main Now, words used in LFAR approach, basically what I want to discuss by this slide is that there are different type of words used for different clauses, and accordingly your approach would have to be decided by you. The limit fixed instruction given by the controlling authority of the bank. So wherever that question is that you have to frame your answer accordingly, frame your approach for verification accordingly. In your opinion, there are certain clauses where the reply is opinion based. It is not verification, of course verification based, but it is more of opinion than certification. So your language should be there. If the clause says that whether in your opinion the adequate controls with regard to credit sanction, so there your reply also should be in our opinion. You should show that the branch is giving, I think, opinion word you should be using. In cases examined by you, test check done. So wherever in cases examined by you, test check done, the question is there in LFAR, you should accordingly frame your answer.
Can we respond to the LFAR questionnaire by just discussing with the management, because given the time frame of 6-7 days, the lengthy LFAR given in the given interest current situation. So can we address the LFAR questionnaire by asking questions to the management?
No, but then asking questions,
or you need to substantiate that.
Yeah,
also.
that substantiate you have to know, because otherwise asking question is a very simple job. Asking it means you are blindly relying on what he is saying. I think that is not correct.
Yes.
Because whatever you are reporting in LFAR has to be supported by your verification.
It's got to be substantiated by evidence.
So these are some of the phraseology which are used in various questions, and accordingly your approach will have to be decided. A coverage of area LFAR, when it comes to assets, you have cash balances, bank balances, money at call and short notice, investment advances, other assets, liabilities, deposit, other liabilities, current liabilities, profit and loss account, general, specialized branch. So if, as I said, if you see entire bank branch audit is covered, so if you plan the LFR in advance, along with your total bank audit, I think most of the areas would be covered. And as I said, the approach should be, depending on the seniority or juniority of the person, you can divide the clause between your team so that you would be ready with verification LFR by the time you conclude your bank branch audit. So there are different type of audit procedures which you may have to do depending on the question in the LFR, inspection and observation, inquiry and confirmation. There are certain questions which would involve only inquiry. Computation is where it comes to revenue leakage, you may have to do computation to see that the bank is calculating interest correctly. There are certain, like there is a question in LFR where they say that there is the increase in profit or loss, whether that has been properly explained by the management. So there it has to be analytical procedure. So depending on the question, you will have to have the audit approach for the question. Now, the first clause on the LFR is cash. The question first is cash balance which varies significantly from the limit fixed by controlling authorities. Now, here the word significantly is very important. See, now as central auditors we have observed, for example, you are doing the audit of a branch where the limit fixed by the branch cash retention limit is 10 lakhs, right? So there may be instances where the balance on a particular day is 10 lakh 1,000 or 10 lakh 2,000. So it is not significant variation. We have seen reports where 3 pages, 4 pages annexures are given, where all the instance of cash variation during the year are given, where even if 10 lakh 1,000 balance is there, it is reported. Because here the word significantly is very important. I think you as a branch auditor need to see that if there is a significant variation, you need to report, not otherwise. So if there is, say 10 lakh is a balance retention limit, I would say if 10% variation is there, it is significant. So if 10 lakh limit is there, if the balance is 11 lakhs, you can report. But if it is 1,000 variation, you need not report. So I think this is one important point.
Maintenance of cash balance by the branch.
Yeah.
So why would there be a limit fixed by the controlling authority on the cash balance that needs to be maintained?
See, because what happens is that the cash limit is decided by the controlling authority on the basis of the volume of business which a branch has. So some branches are deposit branch, some branches are advances branch. So there may be small branch, large branch, medium branch. Depending on the size of the branch, the retention limit is fixed by the bank. And they, I think, it is fairly assessed by them. So accordingly, the limits are fixed. Because
that is beyond the control of the branch. Any cash
no,
balance.
It is not beyond.
Okay, if it exceeds the limit, then what is the branch supposed to do?
Nothing. Except report to the higher authority.
Yeah, that's it.
Yeah.
That's it.
Technically here they have to transfer the currency, cash to the currency chest to reduce the cost burden, because RBI giving interest on the cash holding. There is a specific amount specified by the RBI. If it goes above, then cost is increasing on the bank. So they are strictly followed that they should maintain cash balance with their retention limit.
Okay. So
See,
excess cash is deposited with the RBI.
I think it's a very complex exercise. It is done by the planning department of the bank, because CRR and other things I think we have to discuss to explain this concept.
Yes.
Because cash reserve ratio and other things which the bank has to maintain with Reserve Bank of India. Accordingly, the entire cash retention limit is decided for each branch. So I think you as auditor need not go much into detail as to why this retention limit. Whatever is required to be reported, you report.
During this demonetization area, all branches must have exceeded that retention.
Yeah. I'll come to that. I'm covering that. Excess balance reported to the controlling authorities, as I said. If there is excess balance, what is controlling authority? If a branch is there, the regional office would be controlling authority. If there is a large branch, head office is the controlling authority. So whosoever is the controlling authority, they have to report. So that you have to see if there is an excess limit, whether they have reported to the branch controlling authority. As auditor, you need to verify that. Adequate insurance cover. Now cash has to be insured. Now generally branch doesn't do insurance of cash at their level. It is done by the bank for the entire gamut of branches. All the branches are covered by head office, and they would be giving a copy of the insurance policy to the branch, that this your branch is covered for this much of cash insurance. So you as auditor of the branch, you need to report that the bank has taken insurance for the bank as a whole, and this branch is covered under that. Then joint custody, the cash has to be in joint custody with the branch manager and other officers. So that is documented. So that document you have to verify. Before instruction scheme movement register. So if there is a change of responsibility, the rotation in branch keeps happening. So that you have to see the instruction register. Periodic checking of cash balance. Now cash balance is done, verification is done every day. So when you are there, physically count. Why physical count is required? Because you also inspect that physically the physical verification is done, the procedure is complied with, and you also get to know the cash balance existing physically matches with the books of account. So general scrutiny of cash book is just to find out which are the days when the cash balance exceeded. Ascertain procedure and observe during the audit, that is all those which are required to be reported by you in LFR because the branch has done. Now coming to demonetization. Demonetization, the question is, when it comes to LFAR, your reporting requirement is only this much. They have not amended LFAR to report on demonetization. That is point number one. Point number two, demonetization happened during the month of November and December. So, as far as you are concerned, as on that the new notes already are there. So, what you need to report? So, if at all you have to report anything on demonetization, it would come in the miscellaneous clause of LFAR, right? Which is the last clause of LFAR. If at all you wish to report anything on demonetization, you have to report that. Now, coming to your requirement of reporting on LFAR on demonetization, I would just draw your attention to the guidance note on bank audit 2017 edition of the institute, which has recently been published. Their appendix 12 of their guidance note gives guidance on demonetization reporting. So what I would say is, I think you personally need not spend so much of time, with an investigative mind as to what manipulation bank has done. There may be manipulation, but
randomly test check they can do.
Yeah. So first and foremost, I think when you are sending letter to the branch of requirement, I think in that letter itself, you mention a para as to what were the checks and balances or controls implemented by your branch for effective implementation of demonetization scheme. Right? Now, if you come to the guidance note, para 3, the appendix 12 of the guidance note and para 3, their reporting mechanism is given. So banks are instructed to work in a manner specified in the notification, which is as follows. Now they have given the notification. So first is, every banking company and every treasury had to complete and forward a return, annexure 1, in the prescribed format, showing the details of the cancelled notes held by it at the close of business on November 8, 2016 and recalled by it by 1 p.m. on November 10, 2016 to the concerned regional office of RBI, under whose jurisdiction the head office of the bank is located. Then each bank, branch, exchange bank notes on the denomination 500,000 to report at the close of each business day starting from November 10, 2016 till the closure of the scheme on December 30th. So banks were required to report in annexure 1, which is the format given by Reserve Bank of India to the banks. Every day they have to report to Reserve Bank of India till 30th December. So you as branch auditor, just ask a question to the branch in your letter whether they have done this and you examine on test check basis whether those reports were given. Right? So this is one. Then few banks started maintaining these reports to be submitted by annexure 6A through their system, and the same was auto push. So some of the banks, they had developed mechanized system by which they were sending directly online to Reserve Bank of India. So those documents which they have created, I would suggest that you read that paragraph of guidance. So it is only 3 pages guidance note. So this is as far as required of the bank is concerned. Now coming to specific issues on demonetization which are covered in Para 6 of the Annexure 12, where Bhadresh bhai, your question is addressed. SBNs are not, SBN is specified bank notes. SBNs are not required to be included in cash retention limits. Okay, that is given in the guidance note. The same need not be included for calculation of breach of retention limit. So if a branch has got 10 lakh limit and 10 lakh cash is deposited, they will have 20 lakh balance. So demonetized money which is deposited in the branch should not be considered for retention limit. That is given in the guidance note. So I think that is very clear. However, insurance coverage needs to be relooked. Now this is just a googly which is thrown by the institute. They have just kept it open-ended. However, insurance coverage needs to be relooked. So they have not given the guidance, proper guidance, I would say. But I think you can just make a mention that the demonetized notes were not covered in insurance cover, but technically insurance cover would include all the cash notes. So because they are exchangeable, I personally would take a view that they should be insured. So you can accordingly say that branch has insurance cover of this much, and this was the cash, including the demonetization. So Para 6 throws issues. So basically Annexure 12 of Guidance Note 2017 has 6 paras. Para 3 gives about the requirement of reporting by the bank to the Reserve Bank of India. In Para 6 has discussed various issues with the branch auditor need to address. So one of this cash retention limit is one which is then very important is bank need to there is a concept of suspicious transaction report, that STR. Basically that is from money laundering point of view, that some of the accounts which are newly opened, if there are a lot of cash deposits or cash withdrawal, such accounts are automatically thrown by the system. So guidance note says the bank need to revisit the policy of suspicious transaction report post demonetization, especially transaction not in sync with. So what you could ask in your letter to the branch also, that which are the significant transactions which were reported by STR in respect of demonetization, demonetized notes deposits. So that I think you could ask. So there will be a lot of inquiries which you have to make with regard to demonetization.
Most of the banks get the MIS of the high cash denomination deposits, and they are just supposed to verify and confirm whether this is suspicious or not. So those reports would anyway be available in their folders, which are sent by the and generated by the
Yeah.
So as auditors, we can sample checks too.
So this is as far as demonetization is concerned. Any questions on this? Otherwise we can go ahead.
So do we need to get into those exchange documents also, KYC for exchanging?
Yeah, I think a good point, because what was happening is that for exchange of the currency, I think initially it was 4,000 rupees, right?
Yes.
Then it was reduced to 2,000 rupees.
Yes.
So there what was happening was the KYC, the Aadhaar card, there multiple copies were made, and against same copies multiple exchange was happening. So there I think you could definitely ask a question as to what were the controls exercised by the branch to ensure that there is no exchange of money against the same KYC documents.
Can we limit the scope excluding the demonetization?
Yeah, of course.
Right? I mean, because it's a special assignment, it becomes more like an investigation rather than a auditing audit. So unless there is some inquiry,
that's what I said. It will be more by inquiry rather than actual verification. Yeah. So there I think representation from the management, everything, but some verification will have to be done. In second clause is balance with Reserve Bank of India, State Bank and other banks. I think it is very simple clause to, nothing much to discuss. Obtain balance now. most of the branch, they won't be having Reserve Bank of India SBI balance. So 99% you will not have to report anything on this clause. But if at all you are doing audit of a branch which is not in Mumbai, or where they have with a small branch having account with State Bank of India, then it's like a simple reconciliation which will verify if there is a difference between the books and the reconciliation which is not identified. Then I think you need to report, and the observations can be given. And there may be some revenue items which are pending, like typical cases, amount bank charges, which is debited by the State Bank of India, but it is still lying in bank reconciliation statement. So if it is not accounted as bank expense, then why it is not accounted as bank expense? So you could report that. But as I said, most of the cases this clause would not be applicable.
This side, revenue items requiring.
One minute. I have to go to previous slide. Next please.
Yeah, the second last bullet, revenue items requiring adjustment write-offs. So issue MOC and qualify report. So if adjustments are made, you issue a MOC, and if no adjustments are made, and if it's material affecting the resulting in misstatement, material misstatement, so you qualify it. Is that the meaning?
Yeah, this is the meaning. But qualify report means it is a very significant item because bank size are so huge. That even 50,000 bank charges also will not be significant.
Yeah, I understand.
Yeah.
That's why I said material mistake. Unless it was a
Yeah.
simple mistake.
In respect of that last slide, there are certain branches in the office areas which are connected with the currency chest of SBI, and they have that fact notes problem. And these have been coming from years to years. So what are the steps to be taken? Last 5 years it has been coming like that.
So you definitely have to report this, that there are old balances which are still lying in the bank reconciliation statement. But my sense would be that the bank HO level would have taken care of this aspect. They would have definitely made provision. But then they for control purpose they don't inform branches about all the provision, because otherwise branch will continue to they will not follow for reversal of their entries. So you continue to report in your LFR, and if at all they are able to explain, it's fine. Otherwise, you report.
Does it so happen that head office level entries are passed? I don't know, I'm asking you, since you said this, head office level entries are passed and they are not communicated to the branches.
Provision for doubtful debt, amounts written off are not informed to the branch. Say for example in advance, if there is some recovery to be done, see, even if an account is doubtful, you can still do recovery. So sometimes if the bank makes provision or write-offs the account, they will not inform branch, because the branch will say write-off okay, अभी क्या follow up करने का है. So to avoid that, they don't inform the branches. So these are all same related to reconciliation. Money at call and short notice. Now money and call and short notice is nothing but lending and borrowing by the branch at their level. Again, it's a function of the treasury. So branches are not permitted to do this activity. Even though it is there in the LFR, I think it will not be applicable at your branch. Investment, physical verification on behalf of HO. Now again, sometimes some of the old investment which the banks are having in some rural area, the investments are in physical form and lying at the branch. So they are investments done by HO, but physically lying in the branch, because the investee where the bank has made investment is located in that area. So that physical investment would be there. So if at all there is some verification, you have to do it and see that they are
investments are in the books of the head office. How will you as a branch auditor come to know that they are investments, and therefore you physically verify them?
Then you will be intimated.
Acha, you will be intimated.
You will be intimated specifically.
That you have to carry out a physical
Yeah, because it's a specific case, so the bank will say that this branch is holding investment, so you verify. Ensure the income, of course, it will not happen, but just a technical point, ensure the income earned by such investment is not up, because investment is not parked in the branch, so income will not be there, but still. Examination of all large advances and test check of other advances. Now, advances is one of the main, area of verification in bank branch audit. Examine all large advances and test check of other advances. So, large advances, what is there? I will cover in the next slide. Now, if you see the questionnaire of LFAR, they are broadly divided into 4 categories: credit appraisal, sanctioning, disbursement, documentation, review, monitoring, supervision. So this, if you are covering this, I think entire advance verification is covered. With the annexure to LFAR for large advance to be obtained of all category of branches. Now LFAR, there are certain additional reporting requirements. There are annexures which are to be given, but that is to be given only if the advance size of the branch is more than 100 crores, not otherwise. So if you are doing audit of a branch which is less than 100 crores, then that annexure need not be given. Opinion is sought on compliance of procedure instructions of now credit appraisal, the first clause. Opinion is sought on compliance of procedure instruction of controlling authorities. So basically the question is whether in your opinion the bank has complied with procedure instruction of controlling authority. So there, what you exactly would verify. So when an account, a new loan is sanctioned, there is a procedure for opening an account, the first thing, and there is a compliance of KYC. Then you get the details of the borrower in terms of his credentials. Then you get the financial statement of the borrower. Then you get future projections of the borrower. The project report is nothing but future projections on the basis of which the loan is sanctioned. So the banks, fortunately have got very strong SOP, standard operating procedure in place. So that SOP, that is manual instruction, would be there at the branch. So whenever a new loan is sanctioned, what are the procedures to be followed, that is documented at the branch. So you as auditor need to make inquiry and also see that procedure is followed. But broadly speaking, we know how it happens when a new loan is sanctioned. So this is what we have to verify on test check basis. And
so you mean to say in a credit appraisal, you need to actually verify whether that credit appraisal has been performed, has been actually Well, from
credit
documentation,
appraisal, see, I am saying credit appraisal, not in that sense whether credit appraisal is, you don't need to go to the entire credit appraisal process. But one case definitely you have to select to see that the procedure is
so it should be more like a walkthrough where the SOP has been followed.
Yeah, right.
You will probably do an ABC analysis and see the top accounts they are sanctioned during the year and focus on the top 5 accounts.
Yeah. Now, for example, credit appraisal, what do you see? And you are curious with a lot of questions. See, when a loan is sanctioned, credit appraisal is very, very technical, Say, for example, a borrower who comes with a proposal of loan of 100 crores, now the credit appraisal will need a lot of intelligent analysis, data crunching and everything. So there, not only the person sitting in the bank would be doing analysis, but he also would be in a lot of meetings with the proposed borrower as to how you have done this. Then he will have to go through a lot of comparison of the industry-wide analysis. Say for example, if somebody who is approaching the bank for pharmaceutical setup, then a lot of analysis of comparison with similar industry. Then the track record of this company in the past, if it's on a smaller scale, then whether they'll be able to implement. So all those analysis and many things are involved. So you can just do a sample, but as I said, time is a challenge. You don't have time to do all this in a detailed manner. You as auditor has to see whether the credit appraisal is done. Whether loan application in prescribed format, again SOP. This is nothing but all the questions which are there in LFAR. I have not put in question format, but they are all nothing but questions. Whether intelligent appraisal done by now, this is a very typical question. See now, whether intelligent appraisal is done by, this is a question. The question in LFAR is whether intelligent appraisal is done by the competent person. Now, whether it is intelligent or otherwise, how do you as auditor report on this? So, One thing is whether the person who is doing appraisal has got credit background. Say for example, a person who was throughout his career in the administrative department and he is dumped in this branch to do credit appraisal, whether he is competent. So that once you do interaction with the person, you would know. But my experience says that there is no person deputed in the branch who doesn't have that much of knowledge to do credit appraisal. The bank will never take such risk of deputing a person who doesn't have enough exposure. So, but then I think this is one, as I said initially, what are the procedures we have to do? So this is one question where it is on the inquiry base. You can't do any verification. This reply will be on the inquiry. You can't do specific verification for this. In adequate appraisal documentation, I think the file itself would speak about what documents or what meetings you had with the prospective borrower. Credit facilities beyond the sanction disbursement. Now, one question is whether credit facilities have been given beyond the delegate authority. I think there are so much of inquiries, which go against the officer who has sanctioned the loan, that none of the banks, the bank officer, they sanction loan beyond their authority. No, nobody does that. But there may be overdrawings, sometimes. A borrower, say for example, has got a limit of 50 lakhs and he needs some emergency fund of 5 to 10 lakhs, say for in the last week of March because of some emergency. So the bank manager can definitely give some additional ad hoc limit, but then he will be reporting and there will be ratification by the higher authority because he doesn't have authority to sanction that much of loan. So he will give ad hoc limit and there will be sanction or ratification by the higher authority. There are some control returns which the branch manager will be sending to the higher authorities. And there would be sanctioning. So you have to, the questions which you ask to the branch manager before starting, because specifically ask whether there are any loans which are sanctioned beyond not sanctioning power. Then he would come out with a reply that there were some ad hoc limits which have been sanctioned and they have been ratified by the higher authorities. Verify control returns, which I have said. Now control returns, those old days when CBS was not there, was given by the branch manager in physical form. There were different formats for reports like overdrawings done in some of the accounts, and ad hoc sanction, the borrower not regular in submitting the stock statement, etc. Those statements, those reports were given physically by the branch to the head office. But now with CBS, all the reports which are known as MIS report, they go to controlling authorities. So they go online. Advances disbursed without compliance of terms of sanction. Now here you will have to, there is a question in LFR, whether advances have been disbursed without compliance of terms of sanction. So there you will definitely have some cases to report, because typically what happens is if there is a 70-80% compliance, and because of relationship of the borrower and the branch manager, he is liberal because he also wants business, and if he knows the borrower has got good creditworthiness, he would give loan even if there is no compliance of certain condition, like the net worth of the guarantor. Now net worth of the guarantor which has to be given has to be certified by somebody that his net worth is this much. So sometimes that would be missing in the file. So there is no compliance. The borrower's own income tax returns are not found in the file sometimes. So these are some minor cases of non-compliance. Then inspection of the assets for which the loan is given, that has to be done before the loan is sanctioned. So the inspection report may be missing. Then borrower's contribution, he has to get his own contribution also before the loan is given. So sometimes he would have given, but then there is no document to prove that he has given. So all this, some of the non-compliance instances which you could report. I have given the same which I just discussed. Now this last point is very important. Borrowing, the borrower continues to have operations with other banks. Sometimes the bank, the borrower, he changes the bank because he is not satisfied with service of other banks. So he would change, he may go from X bank to Y bank. So there, when he comes to this bank, the bank has to get a confirmation that he has closed the operation with the other bank. So such operation, when he is shifting the bank, I think such confirmation has to be there. There is generally a confidentiality report also from the other bank, which would be obtained by this bank and how was the operation of the borrower. So such documents also we need to have on the record.
If this name of the other bank is not disclosed, let's say he's a fraudulent borrower and if the name of the bank is not disclosed, then this bank will not come get the confidentiality report, correct?
He answered. Because when he gives his financial statement, there would be some borrowing in the bank statement,
Yes.
unless he has
Yes.
not counted the borrowing. Now documentation. Instances of credit facilities released without execution of all the necessary documents. So here again the question is whether have you come across instances of credit facility released without execution of all necessary documents. So now there will be a different set of documents for different entities. There will be different set of documents for partnership firm, different set of documents for proprietary firm, different set for LLP, different set of documents for limited company. So you have to verify the legal status and see the documents have been obtained according to the status of the borrower. Then type of loan, cash credit, term loan, etc. You have different set of documents. Securities, whether all the securities which are hypothecated or mortgage, whether all the documents are, in case of mortgage, documents are very important. In case of hypothecation, whether charges have been registered with the registrar of companies. All those documents have to be obtained. Now, you may come across cases, typically in case of partnership firm, you come across a lot of cases where they are converted into LLP. So whether the fresh set of documents are obtained on conversion of partnership firm to LLP, I think this is one important verification which we have, because a lot of partnership firms which are getting converted to LLP. So such cases you will have to see if there is a borrower is of that status, whether the documents for conversion have been.
Whenever there is change in constitution of partnership, as documents are posted.
Change in consumer partnership firms, there may be different change. One may be retirement, one may be change in profit sharing ratio. So if there are same partners, 4 partners, and profit sharing ratio goes under change, I think it will not be required because the partner. Yeah, change in partner, yes. Because the signatories change, no? Yeah.
In fact, in terms of sanction, you would say that there will be no change in constitution unless the NOC of the bank has been approved. Once he is a borrower, in terms of sanction itself is visible.
Yeah.
Registration is compulsory.
I don't think so. Unregistered firm also can be given loan.
So, sometimes some documents have to be verified by chartered accountants and certified by chartered accountants. When you go to small branches, they don't have many chartered accountants. They're certified sometimes by income tax preparers.
What documents?
Or some certificates of the stock statement or some. It's not under audit. It's not a company, but the bank has requested to be certified. So by a chartered accountant and other person. But it's not certified. It's certified by an income tax preparer and not by a chartered accountant.
So then I think we'll have to be reported. Because if the letter clearly says it has to be certified by chartered accountant, the income tax preparer is not chartered accountant. But what document it would be? See, now I know in case of borrower having hypothecation of stock and book debts, every quarter it has to be certified by chartered accountant.
Yes.
That requirement is there.
Yes, so same.
But that cannot be certified by income tax preparer because he is not a chartered accountant. So he is.
The problem is that in small branches in suppose far off locations.
Yeah, but chartered accountant are there to know. No, I think that to the branches too.
No, there's a misconcept. Certified chartered accountant, chartered accountant. In local rural area, people don't know. They say it is a chartered accountant. But actually, that is a JDCA person who is a certified chartered accountant, auditor. He can't do that. But sometimes bank people are taking those papers. But we have to pass a remark on that.
Remarks because the reason could be because lack of awareness also.
Vipul bhai, here I would like to add something.
Yeah.
In LLP, partnership firm converted into LLP. In normally partnership firm, charge creation is not there for local party. But for LLP, we have to create a charge with the ROC for whatever finance. There we have to take care.
Because LLP, what Hemant is trying to say is LLP is regulated by the Ministry of Corporate Affairs, or then register of the charges. If you are a borrower in a partnership firm, the hypothecation of stock and good debts would not be required to be registered with any authority. But now, since LLP is regulated by MCA, the charges which you have will have to be registered with the authority. That's a very, very important. Then one of the important questions is instead of deficiency in documentation, non-registration of charges, etc., that you will have to give in your report. So I have given some instances of deficiencies. Documentation left blank, very, very common deficiency. But actually, it's a very serious irregularity. If you see, when it comes to legal battle with the borrower by the bank, if the documents are not proper, the validity of the suit itself may be questioned by the court. So it's a very important point, though it may look very innocuous. Then overwriting in documents, change in handwriting, incomplete documents also again, typically what happens is, the rotation of the transfer of branch officer is very common. So you have loan sanction is 2015 or 2016, and the person who has sanctioned the loan is transferred, who was in charge of that account. He has done half documents, half is done by other. So there will be change in handwriting. These are also serious points, that will be good. Joint documentation in case of consortium advance. Now in case of consortium advance, you would know, there are 4-5 banks, and there would be lead bank. Lead bank is the bank which is what? Highest share of the exposure. So typically the joint documentation would be done, and it would be in the custody of the lead bank. And they would be, giving the Xerox copy of the joint documentation, which could be lying in the branch where your borrower has got exposure. Or some of the banks, they also have additional documents created for their facility. Like say, for example, there is a facility of 200 crores in a consortium, and your bank has got exposure of say 20 crores. So joint documentation would be there with all the banks. The Xerox copy would be there. As an abundant precaution, the banks also execute additional document of 20 crores for their exposure, which also is a common practice. Documents inadequately stamped. Now this is a point which we as chartered accountants, I think generally we are not expert in stamp act in that sense. Though some of the CAs specialize in stamp act, but are we expert in stamp act to verify that the documents which are there are adequately stamped? The answer is no. So now the banks have system in place. They have their legal department. They have advocates on their panel. All the documents which are executed are sent to them for verification, and they give the certification that these documents are valid. And I think that is a good enough proof for evidence for you as auditor, and I think you can go ahead. Because you can't verify the adequacy of stamping of document.
Vetting has been done.
Sorry?
Vetting of the run.
Yeah, vetting has been done. Documents time barred, sometimes documents are valid only for 3 years. So there may be cases where documents have not been renewed, but they take some renewal documents in advance. So generally it won't be there, but if at all it is there, you will have to go. Yeah, DP note. Yeah. That's the procedure with the bank does. Then additional reporting requirement of advance against year of deposit. Now this clause was not there earlier, but it was added by RBI subsequently, that wherever there is an advance against year of deposit, it has to be separately reported by the auditor. The reason why this clause may be included is that sometimes lien is not marked by the bank, and if lien is not marked, you can't really adjust against your advances is as a default. But now I think with CBS in place, lien is marked. You don't come across cases where lien is not marked, but this is additional reporting requirement which you have. But we have
Olden days also we are reporting. Previously also we are reporting for additional lien mark on deposits.
Yeah, but
If nothing is marked, then we are reporting as auditor.
Yeah,
But
yeah,
they
yeah.
are here they are specifically separately.
yeah. Yeah, whenever you say.
After completing this topic, which you know,
Hey, this will go on for.
okay, I think
So whenever you say. Yeah.
Earlier, the lien was marked on the physical FDR.
Yeah.
But now with CBS, the lien itself is marked as the CBS.
Correct.
Should we still insist that the lien should also be marked as the physical FDR which is there already?
No, I don't think so.
That's not.
No, that's not required.
No, but supposing if a lien is taken, if there's a lien on board, and if the banker has not marked it, how will you come to know whether it is marked or not marked?
No, it is the system would indicate whether lien is marked or not.
That's what I'm asking. If a loan has been taken against a deposit, but it's not marked, banker doesn't mark it.
So CBS would show that lien is not marked.
Nobody can withdraw
Not
money.
on the physical
FD cannot be withdrawn because since it is marked. So it's required to lift the mark. Then only. So there's no, even if it is marked or even if it is not marked, nothing going to happen because it is already blocked in the systems.
I think we'll break for tea.
Yes.
And 15 minutes, 10 minutes.
10 minutes. 10 minutes. 10 minutes.
हमारा 15 मिनट तो चाहिए.